If you remember, we will go ahead with this one. If you remember, in the last meeting, we calculated nominal GDP using current prices for each year. But with real GDP, we consider quantities for this year, but we use the fixed prices of the base year. And now we have to calculate Gdp Deflator. What is Gdp Deflator in Arabic? المخفض الضمني للناتج المحلي الإجمالي. What is Gdp Deflator is an price index. Reflects the status of prices of goods and services produced domestically. How to calculate this index? By using this equation. Nominal GDP divided by real GDP times 100 for a given year, such as 2007. Gdp deflator for the base year is always 100. So Gdp deflator is a price index computed by Statistics Center behalf of the government, and Gdp deflator is sensitive to the use of the base year. Okay, let's go here. It's technology. It is really technology. It is a time for numerical problem solving exercises. So I click here. We reach to this one. This file is available in LMS. And we already explained question 2.1. Question 2.2 is the same for your practice. And now we reach to question 2.3. Let me start with Lana. Lana, assalamu alaikum.
Alaikum assalam, doctor.
Could you help me? Do you know, I am seeing the number of the slide in the same time. It's technology. Let me see what happened here.
Doctor, because the window of the word is smaller than maybe.
Maybe. Okay, Lana.
The table below contains data on the Banana Island. The economy only produces food and computers. Use this information to answer the following questions.
Okay, to make our matter, to make our analysis very simple, we have to simplify the problem to get the procedure, and then we expand it to a practical one. So here I assume simply we produce only two goods, F and C, but practically we produce thousands of goods. But the procedure is the same. Just add the third product, add the fourth products up to the 1,000 or 3,000 goods and services. But we use the same procedure. So now we have a quantity and prices of both goods in different 2 years. We can add 3 or 4 years, 10 years. So if you go to the assignment, there is a link and a table about national accounts using current prices and fixed prices. Hopefully you will explore these tables, and these tables are useful to write your assignment. Okay. So let's start with A. Calculate nominal GDP in 2006. When I ask about nominal in 2006, use the data in the row, in 2006. So what is nominal GDP? A quantity times its price to find the market value. So 3,000 times 2, it is 6,000 plus 50 units of C times its price 10 dirhams each, 50 times 10, 500, plus 6,000. So the answer, 6,500. Don't get confused. So quantity of the first good times the price of the same good for the same year, plus the market value of the second good, quantity times its price. In the same manner, we calculate nominal GDP in 2007. Go to the row of 2007. So what is nominal GDP? Quantity of the first good, 3,300, times its price, the price per unit, 230, plus the quantity of the second product, 40 units, times its price, 11 dirhams each. So 3,300 times 230 plus 40 units times 11 equals 8,030. Okay, till now it's quite easy. Now let's go to number C. Calculate real GDP in 2006 using 2006 as a base. The answer is quite easy. Real GDP and nominal GDP for the base year are the same. Again, real GDP and nominal GDP for the base year are the same. So both of them 6,500, both of them. Why? Because see here, how to calculate real GDP? Use the quantities of corresponding year, which is 2006, using the fixed prices of 2006. So this equation is the same we use as for nominal. So simply, when I ask you to calculate real GDP for the base year, just copy paste. It is the same. Okay, what's important, it's here. Calculate real GDP in 2007 using 2006 as a base year. That means when you calculate real GDP in 2007, use the prices of 2006. Use fixed prices of 2006. Let's come back to the table. Okay. So now what I will do, it's technology. See here, the quantities produced in 2007, 3,300 of the first good and 40 for the second good. What is the prices of these goods? Fixed prices. Use the prices of 2000. عليكم السلام. What's your name?
بس محمد الجسمي. دكتور بس ابغى اعتذر منك لان ما بقدر اكمل الكلاس لان انا في الدوام حاليا.
روح محمد الجسمي, right?
اي نعم.
روح بالسلامة.
الله يسلمك يا دكتور.
Okay, so again, how to calculate real GDP in 2007? Consider the quantities of 2007 using the prices of the base year. So 3,300 times 2 plus 40 times 10. So this is the answer. It is equal 7,000. Okay. Now let's go further. Calculate Gdp Deflator in 2006 using 2006 as a base year. Okay, GDP deflator, we have an equation, nominal GDP divided by real GDP times 100. But for your information, GDP deflator for the base year always equals 100, always equal 100. Why? Because nominal and real GDP are equals for the base year, because we use the same prices. The current prices of 2006 are the fixed prices of the base year, the same. Okay, what is GDP deflator in 2007 using 2006 as a base year? I add here 2006 as a base year just to remind you, when you calculate real GDP, use the prices of 2006, and that was done before. What is the formula for GDP deflator? Nominal GDP divided by real GDP times 100 for the same year. As we calculated before, nominal GDP 8,030, while real GDP 7,000 times 100, it is 114.7. So now calculate inflation rate. So again, what is inflation rate? Percentage increase in a price index. The price index is GDP deflator. So delta Y divided by Y. What is delta Y? A change in Y. Y2 minus Y1 divided by Y1 times 100 to get percentage. So use this equation for any percentage change. For example, my salary increase. Delta Y divided by Y. Y2 minus Y1 divided by Y1. A new salary minus old salary divided by the old salary times 100. Okay, what is the GDP deflator in 2007? 114.7. What is the GDP deflator in the previous year? 100. What is GDP deflator in the previous year? 100. Times 100, it's equal 14.7. So the prices averagely decreased by 14.7%. Okay, let's go to the last one. Calculate economic growth rate in 2007 based on fixed prices of 2006. That means when you calculate economic growth rate, use the data of real GDP. Because when the matter comes to economic growth, we are interested in the increase in quantities rather than increase in prices. So what is the formula? It is delta Y divided by Y. The new real GDP in 2007 minus the real in the previous year divided the real in the previous year times 100. So real GDP in 2007, 7,000. Real GDP in the previous year, 2006, 6,500. And here, the same, 6,500. It is 7.7. It is 7.7. In 2.4, it is similar question, but just I change the data for your practice. This is for your practice. Do you have any question till this moment?
No, doctor.
No.
I think, what are you, Ellen?
No, doctor.
What's your name?
Yes, Muhammad Yahya.
Muhammad Yahya.
Yes, doctor.
Okay. So Muhammad Yahya, be ready to read for me. So we finish from calculation. we reach here. So now we will go to a simple topic or another topic. Simple topic or another topic. I will go to Muhammad Yahya. But what is the topic? There is a question in the end of the chapter called, can we depend on gross domestic product to measure social welfare? To some extent, yes, but we cannot depend totally on GDP to measure well-being or social welfare. Assume gross domestic product in the United Arab Emirates and Greece are equal, but it's not necessarily the social welfare are equal also. Why? Because there are some limitations, of the GDP concept, which affects, because there are some matters cannot reflected in GDP, but it is affect social welfare. Let's go with Muhammad Yahya.
Okay, so limitations of the GDP concepts. GDP and social welfare. Society is better off when crime decreases. However, a decreases in crime is not reflected in GDP.
Okay, so GDP is counted by the market value of goods produced domestically in the market. So the number of crimes is not related to the calculation of gross domestic product, but it affects the social welfare. Assume the number of crimes in Greece is higher than in UAE, so we can judge social welfare in Greece is worse off than UAE. Muhammad Yahya.
An increases in leisure is an increase in social welfare, but not counted in GDP.
Okay, so assume people in Greece can spend good leisure time because the weather, the environment, number of parks are much larger than us. So people there can enjoy better than us. But this matter, the leisure time, is not counted in gross domestic product. So I guess social welfare in Greece is better than in the UAE regarding to the extent of leisure time. Muhammad Yahya.
Non-market and household activities are not counted in GDP, even though they amount to real production.
Okay, see here, for example, in poor countries, households do lots of activities in their home. For example, they have a small farm and produce some goods for their consumption, not for the market. So these activities, even it is real production, but it is not counted in gross domestic product, because gross domestic product, market value of goods produced domestically, market value. So see here, if I teach in Skyline, it is part of a gross domestic product. But if I teach my son at home for free, it is not counted as part of gross domestic product. So a gross domestic product doesn't necessarily reflect the real production, because when you look at the data, you feel surprised how people in Ethiopia can survive with much lower income, because they have non-market or household activities. For this reason, they can't survive. See here, just imagine, make a comparison between a lady in the United States of America and another lady in Ethiopia. In the United States of America, the lady has a job and get lots of activities done by the market. She send her clothes to the laundry. She buy bread from bakery, but she send babies to nursery. But in Ethiopia, their ladies are similar to my wife, 7 in 1. They cook, bake bread, teach kids, etc. So for this reason, production in Ethiopia seems to be much lower than in America because they ignore household activities. Okay. Similarly, a gross domestic product doesn't reflect underground economy or black market. Assume I gave a tuition to Muhammad Yahya and he gave me 100 dirhams. I cannot record this because it is illegal, even it is real production. So underground economy is existed in most countries and it is real production. It is real production, but it is not counted as part of a gross domestic product. Okay, so we finish from this topic, but still a gross domestic product is a very good indicator, especially if you converted from your local currency from dirham to dollar and divide gross domestic product by population, you will get income per capita, and you can make comparison between income per capita, income per person between different countries using the US dollars. So for example, in this table, an average person in United States consumes goods and services worth of more than $40,000 per year. But in Spain, it is half, $20,000 per year. But in Turkey, it is less than 4,000. In Jordan, a bit more than $2,000 per year. But in India, it is much lower than $1,000. In Ethiopia, it is close to $110 per year. $110 times 3.67. So see here, this number tells us in Ethiopia, an average person consumes goods and services worth of $100 or around 400 dirhams per year. How they can survive? It seems to be they consume 1 dirham per day. So the Ethiopia is much poorer country comparative to other countries such as United States of America. But this is just we use United Nations standards of calculation. We ignore real production made at home because it is not part of the calculation system of gross domestic product. But it gives us an indicator about the differences between countries. So thankfully, I live in the United Arab Emirates, in which their income is close to developed countries. So we enjoy here consuming lots of goods and services. Okay, when the matter, so now I will not answer these questions. I will leave it to you, but just I'd like to encourage you how to explain these questions in the coming exams. Do you know, instead of make these questions sudden for you, and you don't know how to deal with them in the exam, I gave you a sample of the questions from the beginning. So when the matter comes to the exam, try to read these questions and try to prepare your answer to such questions. Use your own English. Don't copy paste from slides, from the internet, from your friends. Enhance your answer with examples. So these questions, why we include or exclude some items. For example, why we exclude transfer payments when we calculate gross domestic product, because transfer payments is as a gift to some weak people, not for producing goods and services. while gross domestic product considers goods and services produced to the market. Transfer payments is a financial aid from the government to weak people, not for purchasing goods and services. So it's not included in the calculation of gross domestic product. So this is the answer why we should exclude and include some items. This is the model answer. But please, if I gave you the same question, don't copy paste. Try to reproduce them in using your own English and try to give examples as we explain in the class. So here there is a professor from America went to Russia to give a workshop. So what should be included in a gross domestic product? What it should be included in a gross national product? What's the difference? This is another question, but it is more general. What is the difference between a gross national product and the gross domestic product? I will not repeat. Gross national product equals gross domestic product plus receipts of income from abroad minus payments of income to abroad. Mostly in most countries, the difference is minor. Why? Because, for example, for America is minor. Why? Because income received somehow close to payments of income to the world. Why the difference is big in the United Arab Emirates? Because we have lots of expatriates. Most of them send remittances to their home countries. Even we earn some profit from our investment abroad, but still the difference is big. For this reason, gross national product is lower than gross domestic product in the United Arab Emirates. So from all the explanation, you can design your model answer. So here about value added. What is value added? How we can use it to calculate gross domestic product? I already answered this question. And I gave example about a gallon of gasoline. See here next question. Real GDP grow by 10% while nominal GDP grows by 15%. So nominal grows faster because the increase in the prices. The difference between them is about 5%, is an indication about inflation, an increase in prices. So this last question is quite easy. Component of GDP according to expenditure approach equals C plus I plus G plus net exports. What's the meaning of each? Part of the explanation are existed in the previous slides. Why do we add exports and deduct imports when we calculate gross domestic product? Because if we ignore them, that will lead to overestimate and underestimate. And I remember Lana helped me to answer this question. So here, this is the definition of gross domestic product. Explain this statement. You remember when I started explaining this chapter, I remind you there is a question here. For example, what's meant by market value? Quantity times its price. Give examples. So I will not repeat what I explained. So mostly I explained all these questions when I covered the whole chapter. So now it's not time to re-explain again. So now, why should we take a change in business inventories when we calculate gross domestic product? If I ignore it, that means total sales will present gross domestic product, and that's not true, because sometimes I sell more or less than what I produce. So by adding a change in business inventories, I can reach accurate account to gross domestic product. I explained this question, if you remember, when we reached to this point at that time. I guess this is the last chapter. We just explain it, analyze some limitations of GDP as a measurement of social welfare. With the help of Muhammad Yahya, we answered this question.